Good morning, everyone. Welcome to Prebell with William O'Neill India. My name is Rajshekar Kongari, Equity Research Analyst. Before we go ahead into this podcast, the disclaimer for this presentation is that whatever stocks we discuss are intended only for educational purpose. We try to educate our participants here about our O'Neill methodology and should not be taken as an investment advice. Let's look into Nifty's daily chart to get an overview of how the market is placed at the current moment. And I'll also give the O'Neill perspective how we are looking at the market. As you can see here, in the last five trading sessions, Nifty closed in the negative territory, indicating a bearish signs. Also, if you observe particularly on each candle, Nifty closed in the lower half of day's trading range. Again, a sign of strong bearishness in the market. On intraday basis, even though market was trading in the green territory for a brief moment, on closing basis, Nifty was not able to find that strong buying or strong support, and it is again succumbing to selling in the last half an hour or 1 hour and closing in the lower half of place trading range. If you look at the volumes scenario, after budget session, Nifty's volume started to come down, and the activity in the market has come down drastically. If you look at in the last 2 weeks, the volume has stayed below average, which is the red line here, indicating no signs of major activity from institutional investors. So there is no clear momentum happening in the market on either side. Uh, so that is a sign of concern here. Normally, after budget session, you would see some movement on the higher side on the or on the lower side, which is lacking at the current moment. Talking about moving averages, you can see Nifty has clear resistance at its 50 DMA, which is the red line here. In the last 1 week, it has tried to reclaim that level, but it failed to reclaim, and selling pressure has come into the markets. Now on the downside, we have supported its 200 DMA. Nifty might test its 200 DMA in the coming sessions. And if the budget session low, that is 17,350 level is breached, going forward, we might change the market status to downtrend as well. Then we will be exiting our model portfolio in such a scenario. Until then, we'll continue to stay in the rally attempt phase. We are waiting for a follow through day, which is not happening. And looking at the market structure, in the current moment, happening a follow through day is very minimal. However, we started adding stocks to model portfolio recently as Nifty reclaimed its 100 DMA in the last week. However, due to underperformance of the market, our model portfolio stocks are also not able to go forward. Some of the stocks which have reported their results and which are in news, which would be in radar in the today's trading session, are Sanofi India has come up with their quarterly earnings. This company follows a financial year from January to December. So the December quarter is the Q4 for the FY22 for this company. For this December quarter, the revenue has fallen 2% year-on-year basis to 670 crores, whereas the profit increased 45% year-on-year basis to 131 crores. This is majorly because of an exceptional gain the company had during the quarter. Also, the company had come up with a good dividend for the financial year FY22. It has declared a final dividend of 194 rupees per share and a second special dividend of 183 rupees per share. KSB, likewise, Sanofi India, it follows a financial year calendar from January to December. For the December quarter, the revenue has increased 18% year-on-year basis to 520 crores, whereas the profit increased more than 42% to 56 crores. For the financial year, the company has also come up with the dividend of 15 rupees per share for the financial year ended December 2022. Electra Green Tech, which is in the space of electric vehicle manufacturing, and as it has developed a new hydrogen bus in partnership with the Reliance company. It's a major big for the company. The company is aiming to commercially produce these hydrogen generate fueled buses commercially by the end of by the tenure of 1 year. So if that happens, it's definitely a positive step for the India. Overall, the government is focusing on the green fuels and dependence on the crude, government is trying to bring down, and they are pushing electric and both as well as hydrogen fueled vehicles into the country. So companies like these new gen tech companies, they are able to come up with new technologies so that the carbon emissions come down and the pollution levels will drastically fall because of these newer technologies. Talking about global update, overnight US market closed higher in the green territory. Three major indices of US market, Dow Jones, if you look at, closed more than 0.3% higher, S&P 0.5% higher, and Nasdaq, which has heavy weight from tech stocks such as Meta, Apple, Amazon, has closed more than 0.7% higher. Asian markets are trading mixed. Both Shanghai and Kospi are trading in the negative territory, whereas Nikkei is trading more than 1% higher. Nikkei was trading session was closed in the previous session, so definitely opening on the higher end is a positive sign for the Nikkei's market. If you look at SGX Nifty scenario, clearly 100 point higher opening we might expect on the Nifty. Nifty closed at 17,510 levels in the yesterday's expiry session. Uh, However, Nifty SGX Nifty is indicating an opening near 17,600 levels. If the opening gains are sustained, definitely we might see good closing on the Indian market. However, the macroeconomic front, lots of factors are dragging the market down, so that situation is very tricky now. The leaders such as Reliance, HFCs, if they find good buying from the institutional investors, definitely we might see good rally happening in the markets. Until then, we'll be staying. The market might trade in a narrow range, and it might move sideways till then. For the chart of the day, we have picked the Action Construction Equipment, commonly known as ACE company. Currently, it is trading in the ideal buy zone. If you look at here, which is the blue zone here. Recently, the stock has done very pretty good in the last couple of months. It has advanced from 260 levels to almost 370, 380 levels, 100 point gain, which is a 40% gain on the stock price front, which is a very good advancement. Ratings wise, the stock is looking very good. EPS of 795 indicates a strong fundamental profile of the company. If you look at the EPS and sales growth for the company, except for these the 2 quarters, the company was able to generate a growth rate in the higher double digits, which is a very positive sign on O'Neill canceling methodology. Number of funds, if you look at, even though the number of absolute number is slightly lower, but number is increasing exponentially, again a positive sign. If you have good support from the institutional investors, then definitely these growing companies will find uh, more capex in their more capex, and they can use those capex to the company going forward. So overall, the company is placed very good on both the. However, due to underperformance in the market, we are not adding it to portfolio. But if the market structure improves or if the Nifty closes higher on above average volume, definitely we'll be adding a few more stocks to model portfolio going forward. Thanks for joining today's people. Have a good trading session.